the bang. $9 billion went out, 137 companies. So less companies, but boy, the numbers, you can take a look at this and see that this January was about 3x last January. We're trending more up towards where we were in earlier years. Having said that, those earlier years, January was invariably spiked by a large, very large funding. For example, Microsoft investing $10 billion into OpenAI. So really, to normalize, you got to take out the big ones. What's interesting is this month, if I take out the two biggest mega deals, which were about 3.3 billion, that still takes us down to 6 billion, twice as much as we were last year. So we're seeing more fundings come through. January was pretty busy. We'll see how February and the rest of the year goes. But you can see the trend for overall numbers up here. 90 billion last year, 53 billion in 23, and then back up to our very frothy 2021 with 123 billion. We're not going to get back there, but hopefully we're going to have a healthier fundraising year. Interesting point this month was that out of the mega deals, there was more money put into applications. We'll get into it in more detail than it was into AI infrastructure. So you had 1.4 billion going to Databricks. You had 2 billion going to Anthropic. Now, Anthropic model, foundation model, and the foundation model companies, Anthropic, OpenAI, Poolside, a few others have just consumed billions and billions of dollars. But we're starting to see that shift now to the application companies that have integrated AI, whether it's native AI or not. But larger deals now are going to them. Take a quick look at the mega deals because this was another interesting trend. Outside of Anthropic, the majority of these deals went to either application companies or biotech. There were virtually no early stages fundings for anything that was artificial intelligence, and that's a first. The Series A that you see here, Cardigan, Tenvie Therapeutics, and Oral Medicines, all biotech. And while biotech is a continuing funding trend, we see new fundings coming through all the time. AI has dominated over the last 6 months on the mega deals. One other interesting phenomena is we saw 2 mega deals in Web3, Phantom and Movement Labs. And that is, well, 2 of them is a first. One of them is pretty unusual, but we are seeing a building flow of fundraising going towards the cryptocurrency, the blockchain movements behind it, the Web3 associated companies building the infrastructure around that. Well, on the not so good side, there was not a lot of funding to women-led companies this month. And that is primarily driven by 2 factors. One, simply the number of women CEOs who are out there raising money. And 2 is very little in later stage fundings in the month of January. And it's the later stage fundings that pull in the larger amounts. When we look at the individual companies, which we'll do in just a minute, you'll see that they're all from 3 to 10 million in seed, what we call seed stage, the early stage fundings, when the initial products are still being developed and product market fit is their first priority. So yeah, 1%. That's as low as I've seen it again since we started tracking this. So I normally just choose 4 or 5 companies, but there were a really interesting mix of women-led companies. And I wanted to show you more of them this time around. Another interesting trend that we're seeing is more money going into what is termed femtech, and that's around women's health, women's wellness. And you can see here 3 of these, and there's one more I'm not showing here called Teal Health. So Pink DX, Kernel Lab, no, I'm sorry, Pink DX, where was I? Lady Technologies, and one other here. Nope, 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 I'm wrong. I left the other one off. That was Teal Health. So at any rate, femtech is a new, there's been an increase into that area. We hope it'll continue. Pink DX has been around for a couple of years now. The Grove AI. Now, this is not femtech specific, it is healthcare, it's clinical trials in AI. And that's another thing you'll notice on a couple of these, Grove AI, and then over at Koval, AI agent development. And no, 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 get back there. And also an AI product agent assistant. I step back for a moment. Last month I told you that 2025 would be the year of agents, as 2024 was very much the year of assistants in AI. And we're seeing that. And we're seeing agents being developed now, not just in horizontal enterprise markets, but in vertical markets. So the product focus is new. This is the first one we've seen in this. And to round out the group of companies here, we've got the Sonocharge Energy, clean tech, not so unusual. We have seen a continuing flow of companies coming through with women leading them in the clean tech arena. However, in space, and space is now its own thing. This is Spacium and Ashi Desanayake. First one we've seen come through with a female founder and leader. And it is part of a bigger thrust that is supported by SpaceX, by Amazon's Jeff Bezos's Blue something. But
Origin.
we're seeing. Oh, David, was there a question?
No. Blue Origin. That's all I
Yeah,
have.
thank you, Blue Origin. But we're seeing now supporting companies. So yes, space travel continues to be developed. Blue Origin and SpaceX continue to move forward in that, but we're now seeing support around. This one is refueling. Another one is space infrastructure. The entire area of what it's going to take to get from Earth to wherever we end up going, we see startups starting to pick up and innovate for. Let's move on to AI companies. I mentioned to you that we're seeing a shift from lots of money going into the strictly AI infrastructure, AI tools, and more into applications, into agents, into other arenas. And you can see this here. We saw two companies come out this month with a focus on compute, on speed, on being able to accelerate processing. Baya Systems focuses on the actual, not the processor, but everything else around it and how communications can be accelerated. Swave Photonics is an entirely different concept, but the same focus, which is how can you accelerate both data processing within the computer architecture. Now, over on the LLM tools, again, very interesting here. We're expanding the tools on LLMs. You know, first we had just the standard foundation models, then we got some non-standard foundation models, we got open source. Now we're getting companies like Fiddler AI, which focused on the LLM development, but being developed with trust and reliability. And that same concept over to qualified health, but for qualified health in a healthcare environment. On the app development side, again, steady flow of tools coming out that will help you more quickly develop applications, generally for enterprise, based on AI and sometimes specific LLMs, sometimes a variety of LLMs. The one here I want to point out that's interesting is Blue Whale, which is purely Web3 and is focused on supporting AI application development in a decentralized AI environment. That's the first one we've seen in that arena. Moving on down, foundation models. Anthropic, of course, got $2 billion more to continue doing what they're doing. Hippocratic AI is purely healthcare, but they are focused, and I put them in this category because they are focused on what they call healthcare general intelligence. So not AGI, it's HGI. And they received large funding this month. Now, actually, I skipped over data tools. Let's go back over to the left there. And under data tools, we are once again seeing an expansion of the data that can, of what can be done to make data available. Rockfish focuses entirely on a platform that helps you create synthetic data. David AI has gone vertical into video data and provides video data for training video AI. Again, we see more specialization as we go down the line on this. Now, taking all of those tools together and looking at the trend we see happening in terms of applications, you know, we can throw this into two buckets for 2025. One is agents, the other is applications. But you see here agents that cross the boundaries from just being general enterprise workflow into very specific verticals. So in terms of the arenas we see this happening in, the most common coding is right at the top, software development. Many companies putting out products in this area. And right up to that is customer service. That and the video and the audio AI that combines with it into a full system. Those are the earliest, and we're seeing more of them. And this month we saw come out agents for IT and the first cybersecurity company developing an agent for cybersecurity. And we've already seen in the past, Eve Legal with legal agents. That's another area that has been quickly picked up on for extensive extensive fundraising for a lot of startups that are developing for general legal, for patent legal, for uh, all the different areas in legal that you can look at and say, can we specialize and can we reach a large enough market? Now, there's one more area I wanted to point out, and that is under we'll put this under the broader label of applications. But these are companies that are taking AI and being very specific with it. They're Bonsai Robotics is using AI to create specific uh, robotics for very harsh environments. RoboForce is creating a general purpose workforce for manufacturing, for areas in which human labor is harder to come by, where we just don't have the people to fill the places that we need filled. Earth AI is using AI for discovery of mineral deposits, rare mineral deposits. Red AI is radiology, and Suki is back to conversational. They are developing more conversational AI and agents to go with it, but focused now on healthcare. They've moved from a general focus to a healthcare focus. Last month, we had a preliminary figure on the VC fundraising. So they ended up in 2024, VCs raised $76 billion. That may seem like a lot of money, but you have to put it against or in the context of, again, let's look back at 2021, which was a frothy year for VCs as well as for startups. In 2021, they raised $345 billion. So 76 billion is better than last year. It's up by about 10%, but way off our historical numbers. If we go back all the way to 2014, yeah, you're looking at, 40 billion. But every year successively, that has increased up until we hit 2021. After that, we've fallen off, maybe getting back. But one other trend that's really evident in this is that big firms are finding it easier to raise money, to convince the LPs that they should put more money in, even though they haven't gotten all their money back or maybe any of their money back. So the result is that out of this 76 billion, 75% of it was raised by just 30 companies. And the upshot of that is that that leaves a very small amount to be raised by new managers, by emerging managers, by managers who are focused on maybe a new niche. And it's tough for them. As we talked about last month, exits haven't been happening. Money is not coming back either to the VCs, to the founders, or to the LPs. And that makes it really, really tough for a new fund or for a new manager raising a new fund, even tougher. So let's look a little bit at where we are on the exit front. And from an M&A perspective, nothing really for 2025. In 2024, there was the final figure on exits was 149 billion, which is again up a little, but most of this came from small IPOs. There were not a lot of large acquisitions. As a matter of fact, the only really large acquisition in the Well, the last half of the year would have been the bridge acquisition by Stripe to get a bigger footprint for Stripe in cryptocurrency. That was $1.1 billion acquisition. Outside of that, there really hasn't been much. So we're continuing to see companies that uh, aren't being acquired and aren't ready to go public, or they don't want to go public yet because they don't believe they'll be able to get the multiples they need to get the exit that they want to attain. So they do secondary sales. They take and they sell to new investors stock from their early employees, from their early investors. And let's see, the latest on that, as a matter of fact, Deal just did one for $3 billion. And of course, the big Databricks, 10 billion, which we saw the end 1.4 remainder of, that was entirely secondary, no new equity at all. So this is going to continue. The continuation funds are the VC's vehicle for getting money back to their early investors when they can't get an exit for the companies. And let's end up with a quick look at the public market. In terms of overall companies, not good. Most of them are down. In terms of companies that have AI imbued in them, they're part of either the hardware, the software, the ecosystem. You can see Cerebell, Rubik, Reddit, Astera Labs, they're all up. And they're all up, well, put Cerebell aside, but the others are all up a lot. So that bodes well for upcoming IPOs, but it hasn't been so clear that the 100+ companies that have filed for IPO and aren't ready to go, aren't willing to go yet, the environment isn't right yet. When we see, say, Chime, Stripe, one of the large ones move towards IPO, that'll be a sea change. One item I want to point out here, Blaze, second from the top. Now, this is a company that should have been up. They make hardware for AI. They are down 56+%. They chose a unusual, and I do not understand why they did it. At any rate, they chose to go public via a SPAC. And a SPAC just means that a company that may not otherwise be ready for an IPO merges with an existing company. And in general, over the last couple of years, we've seen a lot of SPACs go out, and we've seen most of them go down. A good number of them fail. So Blaze is the exception to the rule, but they did it via a SPAC, not a standard IPO. So shame on them.
Do you think they're down, Don? I mean, I know that the DeepSeek announcement and just some of the confusion around what they actually did
No,
confuse some of the
no.
hardware plays. No,
These guys went public, and within 3 days, they were down by 25%, and it's just kept going down since. This was
yeah,
before the deep Seek thing came out.
yeah.
No, the whether their financials drove it, whether it's the SPAC, the overall um, vehicle that they used, I can't say, but it definitely was not driven down by the deep Seek and all of the kerfuffle around that.
Oh, just curious. I wanted to ask you about
Yeah,
that.
it's
But I
again,
think next month I think we'll talk about a lot of interesting things around DeepSeek and what they were talking about on the All In podcast last week or whatever it was, is just that, there may be some smaller investments and companies taking more of a flyer, some of these investors and some of these different AI ones. Anyway, it's all just starting as we know. And
Oh yeah, well the DeepSeek announcement caused much consternation in the valley, needless to say.
right,
Um, but it was immediately or almost immediately followed by at least two more announcements. Not OpenAI in their model, yeah, but there was an open source group that came out with even a smaller, cheaper model.
right.
It is going to continue. I mean, models. I hate to say it, but models are commodity.
And
You know, it is.
The one out of Berkeley, right? So there's a lot of things. We're actually going to continue tomorrow at the WITI Saturday Connect. We do breakout rooms for an hour, but then we are going to continue the conversation about DeepSeek because there was just so much great info. We had so many smart people there sharing just their insights on it. And now there's just so much more this week. So, but anyway,
Oh, that's
Don,
great. And David, I think stuff is more information is going to keep coming out on that. We're going to have more developments, and we're going to start to see a really clear definition of uh, what with a given amount of investment, what you can do with a model you've built off of that level, because the money that has been thrown into OpenAI, the money's been thrown into Anthropic. While there are a group of investors who say, yeah, we're going to get all of our money back, no problem. There are also a group of investors who are very wary about the unlimited capital that has gone into that. And we're all facing the same thing with compute. We don't have enough power, we don't have enough compute to meet what is seen as, the future as AI proliferates. So I think these are all going to come together. These trends are going to come together, and you're going to see uh, smaller models needing less power and better vehicles to support them. So let me finish here, and all of this information comes from the research that Bob and I do to put together the Pulse of the Valley, our daily business roundup of startup funding and M&A and exits in the Valley. Also, people moving from one company to another or from VCs to companies and back and forth. Uh, this is uh, this is our main publication. You can get 2 weeks free of it. If there are entrepreneurs listening, you can get the whole ball of wax for just $7 a month. We want to support you in keeping up with what's happening in fundraising, in who's funding what is important for you. So we do the newsletter. We also provide alerts, both real time as well as daily summary on just the information, the events that you want to get. We support accelerators and would love to hear from any that are not working with us now. We also provide a lot of assistance, DIY fundraising information, fundraising assist, and we have a new grant program we're just starting to put together. And we would be delighted to tell you more. Just ping us a message. I'll put my email address into chat and love to talk further with anyone. Our next Lunch and Learn will be March 7th, and look forward to seeing everyone there.
thank